The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 118, NASDAQ up 122, S&P's up 37, gold contract up $1.90, trading at $16.26 an ounce. We got silver down 24 cents, $14.29 an ounce. Light sweet crude. Pretty wild, folks. Down $1.43, $20.18. It's already broke the $20 mark this morning, and his bottom line is no buyers in the oil market. Notes and bonds. You get the 10-year note up at 29.6, trading 139.05. The 30-year up full 2 points plus 25 at 181.27. King dollar up 718 ticks at 99.085. The euro is at 110. The yen is at 107.74, and the British pound is at 123 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good Monday morning.
Good Monday.
It's going, that's for sure.
It's going. There's no doubt about that. Bottom line is that, a lot of news over the weekend, folks. I guess the biggest one would be that the April 30th is the new time frame for the social distancing. I suspect that we're going to be in social distancing for a long period of time, even when they take it off.
It's going to be a slow. It's just the mentality, right? Is going to be a slow, gradual process, no matter when it happens, for people to get back to normal and feel completely comfortable. That's the guideline from the president, man. But I think he even said, I think there was even said in maybe May, and I would expect it to at least going to be April and May, and we'll see what happens from there.
Yeah, there's no doubt. And for all you folks that I'm sure as many of us have watched Trading Places, as to turning the machines off, it's pretty amazing what's happening basically inside that commercial mortgage market, in the mortgage market in general for multifamilies. I mean, the bottom line, you saw that article I sent you, Tom, right?
Yes.
I mean, that the pressure is on right now, folks, to turn the machines off, specifically to turn the margin calls off in the business. So it's going to be really intriguing to see if, in fact, they get any traction with that, man. Because it's pretty wild, man. I mean, there's going to be a lot of fights about that, basically. But we'll see where that shakes out.
And I'm not sure, where outside of this scenario, I would have said that's preposterous. But I'm not sure on how. I might be okay with pausing those types of things for a time, but man, that's a dangerous game, right? Because the reason why they're in place is so that you don't have a complete collapse of credit, and all of a sudden, losses are way larger than you may have thought, and that reverberates throughout the industry. But at the same time, you have people, if you're a homeowner, I think you should have a complete moratorium on that home being possessed if you can't pay your bills in some sort. So it's crossing all these lines as we're in this scenario that's never played out before. What do you think of that? I'm trying to make sense of it.
You're right. The problem with the commercial market, it's picking winners versus losers. Because what happens, if in fact that happens, is that the commercial market, folks, is basically it's the CMBS market. That's what it is. So what ends up happening is that if they do that, there's people on the other side of that trade, and the other side of that trade won't default. If they have a hedge on, okay, for their portfolio, for the other side of that trade.
No, definitely.
That's where this thing gets complicated. Do you know what I'm saying?
Yes.
That it's on both sides. So, I mean, we want everything to be done that no one gets down the tubes. That's the bottom line. I think we're all on the same page on that thing.
Yes, no, I do.
But that one's going to be a tricky one,
that's
man.
a great point, man, for sure.
It's a real tricky one because they've always had problems. What happens in that market in general, folks, is that because it's a monster market, but it can be manipulated very easily. It was manipulated in 2008 and 2009. They thought they fixed some of the things in it, and maybe they did. Bottom line is that, we'll see where this baby shakes out. You know what I heard this morning? Now, this is pretty scary, folks, that They had Arthur Levitt on Bloomberg when I was on the way in, Tom.
Okay.
And so this is about the bank tests, folks, okay? So the bank stress test. Listen to this. This is amazing, actually. I want to bring up the Dow Industrials. So, you know, the banks have been yapping about this forever, okay? That, hey, these things are too strict, okay? You know, we want out from underneath them. We want all of the above, right? Well, listen to this. The next stress test comes into effect at the beginning, within 2 weeks, okay?
Okay.
Now, the most dire that the Fed had in the stress test, okay?
Oh, boy, okay.
Yeah, was into the 18,000s for the Dow Industrials.
Wow. That's why I said, oh, boy, because I was like, oh, man, this is going to potentially blow away the worst scenario.
That was the most dire situation, folks, okay? So the bottom line is that keep that in mind as we come out of this, and the banks are yapping, and I never could understand why basically traders, investors in general always stick up for the banks anyway. It blows my mind when that happens, because let me tell you something, folks, okay? You know, the banks are never going to stick up for you, and I just don't get it. But anyway, to make a long story short, the bottom line...
I'm with you on that one.
The bottom line there is that, guess what? I mean, I know it's hard to believe, but we went to 18,213. So that's the most dire. Well, they better make that more dire than that, because we went to that, and yes. Let's see, 1, 2, 3, 4, 5, 6 weeks. 6 weeks. Okay, so
yeah,
and
I just pulled up J.P. Morgan, man, from 2008. You went up tenfold, and then you have the banks out there complaining that, you know, how are we going to survive unless you let us deleverage? I mean, even if you jump around, man, they got destroyed, and that's when these regulations got put in place. Even a company like Citi, okay, went from $9 to $80.77.
Right.
Bank of America. You went from $2.53 to $35 as these are all getting talked about, saying, come on, man, you got to let us release, you know.
Yeah,
and
we have too many regulations. We can't make money, right?
Yeah, you know, and so you see the need for it, because it's always, you can't, the whole point of these stress tests is being ready for a downturn that you cannot anticipate.
Right, right.
That's it. And then the other side of that is that we have all the risk quantified with the money. You know, the banks are saying, guess what? We have our butts covered in every scenario possible. And the whole point is you can't create every scenario possible. Otherwise, you wouldn't need regulations, because you as a company would just be prepared. But and you know, we can jump around, but I agree, man, it's crazy.
Oh yeah, no, it's pretty wild.
That's mind blowing, though, that the worst case scenario. And guess what? It makes sense. If you polled 100 people right on Wall Street a month ago and said, what are the odds the Dow will ever go and reach 18,000 ever again, you might have had 0 people say it's possible. You know, maybe 1, 2 or something. But I mean, it's that.
Because was it like 11,500 points or something, right? It was like, yeah. Right.
You're talking about a 38% pullback, and I think you went down in the Dow to 2014 almost. We were back to, or 2016, excuse me, I think we went back to, just that quick.
Yeah. Pretty amazing.
It is.
Dow Industrials right now up 105. We get the Nasdaq up 118. S&P's up 35. Now it's really cool, folks. Okay, the DAX in Germany, the UK, they've rejected lower price overnight. Bottom line, this market wants higher price, man. We very well may have ABC structures on the way up, setting up here.
Just to finish it off, it was 2014, man. December of 2014, the Dow was at 18,051. We were within 30 points of that.
That's sick. 6 years. 6 years and 6 weeks.
There we go.
Stay right there. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 209, Nasdaq's up 145, S&Ps are up 43. Let's go to Chip in Winter Park. Hey, Chip, what's going on?
Hey, Tom. Good morning. How you doing? All right. Listen, I'm watching too much TV, I guess. I'm watching CNBC. You got Mohammed Arian from Alliance on, and he's on for a half hour talking about rebalancing or repositioning a portfolio. He says the next 2 days will be favorable for a rebalance or a repositioning. Can you just tell me what exactly does that mean?
What's happening is that there's going to be a rebalancing inside the ETF structures, okay? At the, is tomorrow the end of the month? Yeah, right? So yes. It's like $1 trillion. So I wouldn't take too much looking at it too much, because what ends up happening is this: there'll be just as much buying as there is selling inside of those indices. That's how it works. And normally it's pretty smooth process. That's kind of how it goes. I've actually got a couple emails on it too, that people are worried about that repositioning, that rebalancing. But every time that I've seen it, there's a couple dislocations at the close, but that's it, man. Okay. Yeah.
Okay, thanks, Tom. Have a nice
Okay,
day.
man. Have a great one. Have a safe one. Let's go to John in Philly. Hey, John, what's going on, brother?
Good morning, Tom and Tommy.
Morning, John.
Say, Tom, I want to tip my hat to you on your skill and thank you. I spoke to you Friday, Tom. You may recall I'd asked about the E-mini S&P futures, and they were probably trading somewhere like 25, 30, or 40 at the time. And you focused in on the pullback and how it handled the 9 a.m. 1-hour bar that was a big high-volume rally back on March 26th.
Right.
Lo and behold, Tom, I'm in front of my screens by 5 o'clock Sunday, as I typically am, just to see how Globex opens. They gap lower, and wouldn't you know, the June E-mini S&P futures went down to 24.45, which was right under the bottom of that high volume, the low of that high volume bar, immediately rejected that price and turned up. So that I had been thinking about what you had said, so I used that to my profit advantage. So hence my thank you to you and my tip of my hat to you on those high volume bars. So
well, we appreciate you growling and prowling with us out here, man.
I ask you now, where do we go to next, sir?
Well, we're still, this is what's really cool here, folks, okay? Now, I use these 10-minute volume bars because I've traded off them forever. What I've found, if you get an ABC structure in a 10-minute bar, the bottom line is that what ends up happening is that most times, you can get that ABC, and we're still in an ABC up, and it's a complex one. And so what it means on a complex one, folks, is this, is that you go under the B point, you basically you've got to a higher high, you've already taken out the B point first, and you take it out with volume. Then you go back under the B point, meaning and then bottom line, you start making the surge again. So we're still in an ABC structure up, and it's a monster one, man. it's I forgot, let's see, 25.87, and this comes right back to Thursday too, John. That ABC up. So let me just do this quick. So let's see, calculator. So we got 25.87 is your B point. Your A point is the bottom of that at 8:30 in the morning on the 26th, which is 24.02. So I'm ballparking this, folks, just to get this. So it's a 185 A to B, and your C point on this is 25.44. So plus 25.44 gets you 27.29. We're still in that. That's
funny. Well, I won't be surprised if that gets hit by 4 o'clock today.
No, I can't see it today, but what I can see I can see it in the next couple of days. This thing wants to go. What we had here at the Open, right? Your first little bar at this Open was a good one, man. It got to that 25.68. It pulled back with light volume. Your next bar is going to need a little more. We need a little more juice right now. But if we get a little more juice, man, this thing will be up there hitting Thursday's high, which I can see this at 2,600 today. We're 25.
Well, Tom, once again, thanks for highlighting that observation on Friday of that. The number was that 24.50, the low of that high volume rally bar back from Thursday.
Yes,
was very, very helpful to me. Didn't know at the time was going to be a winner, but I knew the risk, so that's all you can ask for.
Thanks, man.
Thanks, John.
Great. Thank you.
Have a great one. Have a safe one. And I'm sure most of you Tigers and Tigresses, we're all at 6 o'clock, man, looking at those futures opening.
Isn't that remarkable, man? I know.
Yeah,
I actually said last night, you know what? I made it to 6:45, and I said, whoa, what have I been doing for 45 minutes, man? The market's been open because I was, yeah. Hey, you know what else I did this weekend? I signed up for Disney Plus, man, with the bundle. I finally fell into it.
Okay.
I did. And I just did it, and I said, you know what, man? These streaming companies, the acceleration that I imagine they're going to achieve through this is, we've seen it, right? We've seen it where Netflix had problems. We ourselves streaming, TFNN, had problems with YouTube keeping up. Thursday or Friday of last week, the load on people streaming, internet, cloud, working from home, and it was great, man. I loaded up, and I was thoroughly impressed by Disney in terms of, Star Wars, what are they, Frozen 1, Frozen 2, National Geographic, Tom, and it comes with Hulu and ESPN.
And how much does it cost?
You know what? Shame on me. It's either $12.99 or $13.99.
That's nothing. It's 12. No, that's amazing.
Yeah.
Wow.
And I'll pull it up.
Pretty cool.
But pretty cool, and it just made me think of the everything going on with those companies.
Yeah. Oh yeah, there's no doubt. So let's get back to these mortgage bonds for a second, folks, because this is now this. So watch this. So oh man, there's so many angles to this. It's unbelievable. So what has also happened is this. Now I didn't realize that this happened also, but when you hear this one, folks, this is like over the top. Okay, so. First, we talked about, we get the commercial mortgages. They're backed up because of the fact that funding is backed up. So you have a market that goes south, okay? And the commercial market wants them to stop margin calls on that aspect, right? Now listen to this one. This one's actually could be more intense because this has to do with the broker-dealer community. So what ends up with the Mortgage Bankers Association has urged the U.S. Securities and Exchange Commission to also stop margin calls. So picture this, folks. Most of the time what ends up happening is that for you and I, we have a broker-dealer. The broker-dealer comes out and gives us a margin call when our equities or our futures goes under margin, okay? We have to pay the margin call. So now this is what's going on with the broker-dealer community. They made a monster mistake. Now watch what happened here. When this market was going south, they turned around and they shorted mortgage bonds, okay? Now I'll explain this when we get back because you want to wrap your head around this.
I do.
This is like crazy.
Okay.
Dow Industrials up 189, NASDAQ up 147, S&P's up 41. Tommy and I are coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights today, by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 209, NASDAQ up 143, S&P's up 42. We're talking about mortgage bankers, and we're talking about margin calls, folks. Now, this one is really intriguing. Did you get to read it at all, Tom, at the beginning?
I did. I skimmed through it, but I did, about the mortgage bankers asking the SEC, yeah.
Yeah, so watch this one, folks. Now, this one gets really intriguing, and this is why. So picture you get the mortgage bankers, which are all the big banks, by the way, okay? When they sell mortgages. The bottom line is that they will turn around and they'll short the mortgage market. And if it's a pure hedge, folks, what's supposed to happen is that, let's say you get $1 million in mortgages. Okay, you're going to do $1 million on the other side for a percent. Okay, well, whatever that is that they think it may move. Okay, that's called the delta neutral position. But what had happened is that the mortgage bankers turned around and basically went short. This is telling me they went short. They went net short in the mortgage market, even when they're selling the mortgages. So now what has happened, right?
Can I jump in and ask for a second? Because this is where I got a little lost in the article, right?
Right.
Is that if you can help me, that it says that when lenders issue new loans, this is done because the loans might fall in value before the banker can sell them to Fannie or Freddie, and that's why they're shorting those mortgage-backed securities. So that's what I said. I said, wait a second. So if the hedge goes really bad against them, don't they have the other side of that they've made all this money, or how?
Yes.
So
stay right there. That's correct.
Okay.
Now, and then what ended up happening is this. The Federal Reserve came in last week and started buying them all. And so the bonds went up exponentially instead of down.
Okay.
So they're on the wrong side of the bond market.
Perfect. I got you.
Okay. Now watch what happens, folks. And this is where I would say that there's going to be large operators that really understand this even more than we do, as we're just trying to bring it to you.
What, can I jump in real quick? But wouldn't they still have a mortgage-backed security on the other side that has made a bunch of money to potentially offset that, or not?
No, they had, but the mortgage market went up exponentially, and the bonds did as soon as the Fed came into the marketplace. Because see, the Fed's opening everything up again. So let's say we'll just use a mortgage bond as 100, right?
Yes.
Well, the mortgage that went down, folks, like to 75 in a heartbeat. Okay. It's already back to 94.
Okay.
Because now there's unlimited money inside the mortgage market.
I understand. Cool.
Now, but what would have happened if they were delta neutral? They wouldn't be in this position.
That's what okay, and that's where I keep getting a little confused, right?
Yes. Because they have to be net short the mortgage market. Because one would.
I agree.
Exactly.
And I don't think that article did a good enough job.
Didn't. It's probably not a trader that did it, but
yeah.
But that's what's going on there. So I think they're going to have a hard time with the regulators saying, "Hold it, man, you're net short, man. If it was a true hedge, guess what? You're delta neutral." Right. No problem. Here's the mortgage. Here's the other side of it. You put them together. You might have a differential of 1% either way, but you're not net short the market. They would net short the market, man. And now they realize they probably didn't close it the first day, didn't close it the second day, and now this market is not only back, folks, inside the credit market. Listen to this. Yum Brands. Let me pull up Yum. When you see this, I saw this morning. I thought I was seeing things, but this is really good, so you understand how things can change. Yum Brand, this is the first junk bond in 30 days. I think it's 30 days. Let me see. So Yum's going to push out $500 million in a junk bond due 2025. If it's not 30 days, it's like 25 days. It's a long period of time. So that's positive for the marketplace, and that
you're able to push out, right?
That's right, and that has to do with the aspect that the Fed is basically in there buying. So yeah, man, there's so many twists and turns, right?
Oh, it's pretty amazing, man. From a market perspective, a trading perspective, like you said, man. You're pulling up the futures at 6 or 6:30. I was joking with friends. Futures only down 2%, and you can almost rejoice, right? Because that was quite a collapse on Friday.
I was drinking a little tequila.
Oh boy, yeah, perfect. Get ready for the work week. It's Sunday night.
It's totally, and so I pulled it up, and it was like down 30. I said, "Oh man, that's nothing. That's like a joke."
That's I know, and that was my, it's that's the case, especially with how Friday ended.
Totally, because that was a sell-off. That was a sell-off.
And the news over the weekend just continues to be. I wrote the morning market report this morning, and I think I still have to hit the button to actually technically get it up on the website. But when I update the numbers, right, of this coronavirus, and so I went into kind of my template when I had it, and Friday's numbers for the U.S. was like 83 or 87,000, I think, and we're at 140. 3,000 or something. And I was like, wow, on Friday it was 80 something thousand. It's 140,000 when I just pulled up Monday morning. So some stark headlines, coming into the week. And still we're up, almost at where we were at the 315 on Friday.
Yeah, and I'm sure that many of you market participants are going to be looking at the market saying, now, how does this work? How does it work that we're going to be social distances to the end of April? We know the world's in a mess, and then the market, bottom line, just continues higher.
Yeah.
It is what it is, folks. As soon as there's no more sellers, guess what?
Yeah. And rightfully so. If the Congress and the Fed are going to step in, I mean, there could be another fiscal stimulus plan from Congress. Very, very possible. Depending on what happens, I assume. And then you have the Fed in there as well, and hopefully they do provide that type of trillions of dollars of liquidity, and we don't miss a beat, and we add that money to the debt. But in the face of a global pandemic, folks, some trillions of dollars and the economy comes back online in 3 months versus just complete devastation is a much preferable scenario.
And what has also happened here, now this is pretty intense, we all should just try to get a much larger world perspective on money in general, because you can you can learn a huge amount about how money moves and just how powerful the U.S. dollar is and the Fed is also. Because what's happening is that now other central banks in other countries, folks, need money. And what's going to happen here is that it's going to be the Fed is opening lines of credit for other central banks. And that's why you see that here, if we bring up the Brazilian real, you're going to see some of these currencies, man, they need money. And, this is pretty amazing. And you can see it through the correlation of where their, currency is versus where, the dollar is. Look at this real. This is, if we go back to 2011, the real was 1.51 reals to $1, folks. Today it's 5.17.
That's remarkable.
It's over the top, man.
It is.
We could go through a few more currencies, but little by little, if you start to understand how that works, it's kind of pretty cool, man. Do you know what I mean?
When all the dust settles, man, maybe we got to go spend some time in Brazil.
One of my Roland's.
I do. You're traveling a lot.
I'm going right down to Roland's after this is over. I'm going to see what we can get out of Brazil, because guess what? 5.17 versus 1.5 to U.S. dollar.
You have over 3 times the buying power, man. Over 3.5 almost times the buying power.
It's insane.
Yeah.
Dow up 338, NASDAQ up 174, S&P's up 54. We'll come right back, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now up 360, Nasdaq's up 187, S&Ps are up 57. And don't forget, folks, over at TFNN, as you go to TFNN, you're going to see we have open house at TFNN inside our Tigers Den. And, you know, we talk about this many times, folks. TFNN is like Hotel California. Bottom line is that once you check in, you can't check out. And I do want to basically thank all those Tigers and Tigresses coming back in the den.
Yeah.
It's like old home week, folks.
It's great. It's a good turnout. There's a lot of action in there.
It really is.
I'm usually in there by like 6 in the morning, and there's already action in there, man. 6, 7 in the morning between then, because just like, you know, it's an exceptional time in the market. Normally, that might be a slow time in the S&Ps. Not right now.
No doubt. And so if you'd like to come in the Tigers Den, folks, real easy to do. You go to TFNN, you go right under featured content, you hit open house. Bottom line is you hit subscribe, and you're going to see it's $39 a month, $179 for 6 months, and $299 for the year. Now, you're just going to hit 1 month, and then with the promo code is you put open. And as soon as you put open, bottom line, you are not going to get charged. $39 comes off. You keep it for a month. If you like it, then you can decide on 1 month, 6 months, a year. It's a great vehicle, folks, that is, we feel, very inexpensive for what you're getting. You know, and what it is, it's a culmination of traders and investors giving their opinions, which is cool. I mean, it's not a pump and dump deal. It's not any of that. There's real education in there that, you know, basically we think can help all of us. Let's go to Bob in Westfield, Mass. Hey, Bob, what's going on?
How you doing, Tom?
I'm doing great, man. Yourself?
It doesn't get any better than this, Tom.
That's a good thing. That's a good attitude, man. I like it. Totally. Hey, it's where it's at, man. It is what it is, right? You know, guess what, folks? It is what it is. You know, there's people that are getting hurting, and we're alive and kicking. So grab it, man, and run with it.
My big problem that I wanted to talk to you about was with all this debt, which is just going off the charts. We're up around $25 trillion right now. Do you think that devaluation is in the cards here in the future?
Well, here, this is a great question, because this is, you know, I was thinking about the inflation-deflation deal, right? And what happened in 2008 is that we're all waiting for inflation. It didn't come in. And then it's like, okay, we're putting all this money in right now, and it's like, will it come in or not? And I'm really thinking that, you know what, it might not come in. And the reason being is that everything just got devalued by 39%. Like, we just collapsed, right? So if you're in the marketplace, it's either 20% or, you know, let's say 30% that everything got devalued. So now they're going to put cash in. Now the cash that's going in is just going to basically maybe weigh out what just got devalued. You know, so it's going to be really intriguing, like, how that works. Because when you don't take money, let's picture this, folks, okay, in portfolios. If you didn't take the money out, you never had the money. But in reality, you had the money in your head. You know, so I think the camp is still out here. But, you know, after I was thinking that, okay, inflation has to come in, I says, well, you know what? It really doesn't have to come in because the devaluation that we just have seen is amazing, right?
Well, I was worried we'd have something like the Weimar Republic here. You know what I mean? Where you turn around and need a barrel full of money to buy a loaf of bread.
That could happen in other countries. I don't see it happening here because what you can see is that what has happened here more than anything is that other countries are actually needing money and they're coming to the Fed also. You know, so the dollar is still the strongest in the world, not just in our hemisphere. The dollar is the strongest in the world. Our country is the strongest in the world. So when you actually look at what money is all about, money is just a transfer that I think I will give you this for that. You know, so.
But if you turn around and keep this out long enough, you won't have enough way to generate more money or productivity, I should say. You know what I'm saying?
Well, stay right there. When I says, how you doing, you say they're doing great, right? So?
Yeah, I'm doing great. But what
okay,
about
so
the rest
watch.
of the world?
I suspect that you're producing.
Well, I'm actually not producing, but that's beside the point.
Okay, well, the production is going to come back. And, you know, this is where it comes down to that the United States versus other countries versus regulations versus what do we have. We seem to be very, you know, quick on the get back. So, you know, my take is that no, it's not even going to be close to anything that happened in Germany years ago. Do you know what I'm saying? I just don't see it. You know, I could definitely still see, you know, and that's the battle. I think that's a fundamental battle in my head right now. Like, okay, maybe we won't have inflation because we just got deflated so dramatically. But we'll see, you know.
Mm-hmm. Okay, well, thanks very much, Tom.
Thanks for calling, man. Appreciate it.
Yep. Bye-bye.
It's a wild one, Tom, right? I mean, in general, you know what I mean? It's like
it's a great question, man. You know, because it is. It's 25 trillion. My goodness, man, we got to get it under control. We can't get it under control over the next 3 months, though. That's for sure. But we really do. So
right, pretty wild.
Yeah.
So let's go take a look at some of the higher volume equities out here and see what we have out here today. You got. I suspect you get Ford down 18 cents, General Motors up 13. Abbott Lab is a big number. Now, this came out Saturday morning, folks. Abbott Lab is coming out with a test. They're going to start making 50,000 test kits on Wednesday. And these test kits are going to be able to give you a answer in 5 minutes, which is just phenomenal. Because when we first started this, you're talking about 7 or 8 days.
Isn't that? I was thinking that myself, man. Yeah. Talk about the fast pace of technology.
Yeah, it's huge, and it is another one that it's going to show. You know, hopefully that, you know, our companies are so fast and furious that they'll be able to come up with something quicker than, you know, we think at this particular time.
I keep hoping that too, man. When I saw, you know, Johnson & Johnson had news, right, that they're going to start testing human trials potentially in September.
Right.
Not sure how their shares are traded. They were up like 5%, and they said they could have a vaccine as early as 2021. And that's what I keep looking for, the article that says it's going to be even quicker than that. And I hope so. And hopefully they're just keeping the expectations low. And hopefully they have a potential, if things go well enough, to push things out. But it's pretty worrisome, man. When you talk about a vaccine that you're going to put potentially in hundreds of millions of citizens, you got to make sure that it's safe, or the harm could be worse than, you know.
There's no doubt. I mean, you know, we've had that deal with the malaria pill. And what was pretty wild is Novartis CEO, folks, came out over the weekend basically pushing it, you know.
Yeah.
So, let me see if I can bring up Novartis right now. I want to see exactly what he said.
It's NOVA. I think it might be NVS.
Okay,
Novartis. NOVN.
Okay, so watch what he said. Now, this is going to get interesting. So he said he's looking for a second wave also. This came out, so the pandemic comes in waves. His comments. Okay, so yeah, we'll do this as soon as we come back. The bottom line is that he's basically saying it's his deal, but, you know, we'll see where this shakes out, man. Yeah. Tommy and I come right back. Stay right there, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 260, Nasdaq up 167, S&P's up 47. We were talking about Novartis, their CEO, and the bottom line is that we'll see where this shakes out. This is it looks like that malaria drug. Okay, so what this is saying, what he said is that Novartis' most promising treatment is a malaria drug, which is in preclinical studies with animals. And the first data from the clinical study shows that it kills the coronavirus, he said. So he actually came out with that. So that's we'll see where this whole thing shakes out. I mean, I'm sure that our own FDA, if they thought that, they'd push that through as quick as possible, because that's how they got that Abbott lab test out so quick. You know. You there, Tom?
Yes, your mic muted.
I think you got it muted.
Where is he? I got him up.
Okay. He's there. I can see him talking. Okay, so market-wise out here, we have, folks, is that you get the S&Ps right now up 49. This baby looks to me, let's see what we got volume-wise here. Okay, so volume-wise here, building a little cause. Yeah, we're gonna go after the high of Friday. Well, high of Friday is 26.05. Right now, you're at 25.72. We've made it 25.82. Bottom line is you get some momentum. Now, what's also happening, folks, is that we're coming into window dressing, and the bottom line is that we very well may get it because there's going to be large amounts of money that still going into 401ks, and the losses are probably dramatic. But the bottom line is that new money coming into 401ks, the broker-dealer community does not get paid unless they put that money to work. So I expect that money is going to go in the market. Have a great one, folks. Have a safe one. Stay right there. We got TD Ameritrade coming up next. I'm Ambassador Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Go get him, folks.